Thank you for joining me today for sales tax collections and reporting. The first thing that I hear from most people when I bring up this topic is why. They're very confused because they assume because we're a nonprofit that we're exempt from collecting sales tax. The fact of the matter is that as a charitable organization, we are exempt from paying sales tax on transactions where we're purchasing goods for our charitable purpose. However, in the state of Florida, we still have an obligation whenever we sell goods to somebody else to collect sales tax on those items and send it to the state. So when would this be in effect? Well, in our case, it's almost always with fundraising events. So for example, we have a fundraising event at which we have a live auction and we auction off items. Those items are taxable, sales taxable items, and we have to collect and remit sales tax to the state of Florida. Likewise, our silent auctions fall into that category as well. And then finally, some of our fundraising events are quite simply sales. And for example, in the Keys, annually we sell a Christmas ornament. The sale of those ornaments is all sales taxable, and so we have to charge sales tax and send it to the state. Occasionally there are situations where program activities are generating sale transactions in which we have to charge sales tax, but it's very, very rare. There is one special consideration here that I want you to be aware of. This happens a lot with our fundraising activities. When we're auctioning off gift certificates or gift cards, we do not charge sales tax on those items. When you think about it, the sales tax is going to be paid by the person, the customer who uses the card at the retail establishment at the point that they buy something. So it would be duplicate taxation if we were to charge them sales tax. I don't think anybody would make the mistake of thinking that we should collect sales tax on donations. That seems pretty obvious. But let's look at a special situation where we have donations which come into play during auctions. Occasionally, we have people at auctions who will bid an amount higher than a manufacturer's suggested retail value, the MSRV. Let's look at a scenario. For example, if we had a person at an auction who bid $500 on an item and they won that item in that auction, but the value of that item was only $300. We would then assume that they made a donation of $200 and made a purchase of goods of $300. For purposes of sales tax, we're only going to charge sales tax on the sale, which is the $300. Because again, we're not going to charge and collect sales tax on a donation. So how do we calculate the sales tax? Well, there's two different methods we can use. One is where we add the sales tax on top of the sales price. That's probably pretty familiar to you because if you walk into any retail store, you'll see a tag on an item and that item does not include sales tax. You get charged, the sales tax is added on to your ticket when you get to the cash register, and you pay the store the amount of the item plus the sales tax. The second method, however, is a little bit different and will take a little bit more explanation, and that is where we have a situation where we've told our auction participants that their bid will include sales tax within it. In that case, we have to work backward to figure out the math. So let's look at the first scenario where we're adding sales tax to the sales price. So in our example, we have a total sale of $10. Our sales tax rate for the county we're in is 6%. So we will multiply the 6% times the $10 to get 60 cents in tax. we add the $10 sale to the 60 cents of tax to get the total amount to collect from the person of $10.60. So now it's your turn. I'd like you to grab a pencil and a piece of paper and consider the following scenario and see if you can calculate the correct tax. A pair of shoes at the Pair to Remember event auction valued at $500 sold for $600. Your local sales tax rate is 7%. You want to add the sales tax to the total collected. How much needs to be collected from the auction winner? Take a moment here, pause the video, and try to do the math on your own, and when you resume the video, we'll take a look at the answer. So the answer to our question is, we have a taxable sale of $500 times the sales tax rate of 7% means we should charge sales tax of $35. The winning bid was $600, so we add that to the sales tax and we collect from the person $635. So let's take a look at that second, trickier scenario for how to calculate sales tax. In this scenario, we have told our participants in our auction that when they bid on auction items, that the price that they're bidding is inclusive of sales tax. So what we have to do is to work backward and try to figure out what the amount of the sale is. So let's say that we collected or that they bid $10 for something. That $10 represents 100% of the sales price plus the sales tax, which is a percentage of the sales price. So let's say that the sales tax rate is 6%. It's 100% plus 6%, or 1.06. So let's divide the $10 by the 1.06, and that is going to give us our total sale, $9.43. So we'll take that total sale, multiply it times the sales rate, tax rate of 6%, which will give us the amount of sales tax that we're charging, which is 57 cents. So how do we know that we did this correctly? Well, we're going to cross-check ourselves. We'll take our total sale that we calculated of $9.43, add our sales tax that we calculated of 57 cents, and we can see that when we add those two together, it adds up to the $10 that was the total amount that we collected. So we've done our math correctly. I'd like you to try now. So again, grab your pencil and paper and take a look at this scenario. We're selling ornaments for $25 each, and you advertise that this includes sales tax. Your local sales tax rate is 6%. What is the breakdown of your total sale and sales tax? Please pause your video and do your calculations, and when you resume the video, we'll take a look at the answer. Okay, here we go. We collected $25 for the ornament, and that represents 100% of the sale price plus 6% sales tax, so we're 1.06. We divide the 25 by 1.06 to get the total sale of $23.59. When we multiply that times the sales tax rate of 6%, we get the total sales tax of $1.41. So that means our breakdown is a total sale of $23.59, sales tax of $1.41, which when added together bring us to the $25, which means we did our math correctly. So what rate do we charge? We've used different rates in the examples that we've looked at. Well, in the state of Florida, the way that it works is that across the entire state, we all pay 6% sales tax. Then some counties, not all, but some, have added onto that an additional tax rate that they collect in order to fund their services locally. So you have to look at what county your office is in order to determine what sales tax rate to charge. This grid that you see in front of you is contained within a document on the corporate library, so it is available to you at any time, and we'll take a look at that document a little bit later. So how do you record this? Well, it's going to be in two different parts. First of all, you're going to record the total sale amount as your revenue. That's the amount of money we get to keep. That's the amount of money that goes on your financial statement. And then the sales tax portion of the payment will be recorded to the sales tax payable account, which is 11140-0000-00. That account, when you put money in that account, that will prompt us to send that money to the state of Florida. How does it look on a receipt? Well, here we go. Let's take a look. We have a sample receipt here. John Doe purchased an auction item at the Tampa Fair, and he bought it for $500. We charged him $30 in sales tax. So we've made the receipt out for the total amount that he gave to us, which was the $530. And then in the coding section, you can see we've coded this to the revenue account for the $500, and then sales tax for the $30. So what about when something unusual comes up? There are many scenarios that come up in any of the situations that we deal with day in, day out that from time to time are unusual, and in trainings like this we can't cover all the possibilities. So I encourage you to always remember that you can call us at headquarters to discuss anything that is out of the ordinary, and we are happy to help you work through the details of that. A couple of specific things I want you to keep in mind that are unusual situations that don't often come up but may come up, so you need to have an awareness, are that if you sell any items to tax-exempt organizations, like Easter Seals Florida is, or to retailers who are going to then resell them in a retail establishment, we will not collect sales tax in either of those scenarios. There are some special things we'll need to do, and we will help you with that. Some documents we'll need from them. But in that scenario, we don't collect sales tax. But in any case, if you have anything unusual that you're not quite sure how to handle, make sure to give us a call. For more information, I would direct you, as usual, to the corporate library, where you'll find the sales tax policy, as well as a document which is probably going to be more useful for you, which is the sales tax rates that we looked at. And on that same spreadsheet, there are tabs for calculation templates. Let me show you that document. It's a very useful document. I want you to be aware of how to get to it. When you go into the corporate library, you should have this icon on your desktop. We'll go into Accounting and Financial folder, and then the Accounting Forms and Procedures folder. We're going to scroll down, and we see the sales tax rates and calculation template. When we open this document, it is an Excel document. You'll see the first tab are the tax rates we looked at, and those are updated annually. And then there are two additional tabs at the bottom here, each of which contains a calculation template for the two methods. The first tab is the method where we're adding it on top, and you'll see all you need to do is to put in the total amount of the sale and the sales tax rate in your county, and it will do the calculation for you and give you the breakdown of how much you need to charge and how you record it on your receipt. Likewise, on the second calculation method, where the amount is included in the total that you charged the person, again, you put in the total amount you've collected, the amount of the sales tax rate in your county, and it will calculate the breakdown. If you have any additional questions, I encourage you to give us a call at headquarters. Either Rakesha Blake, our Vice President of Accounting, or myself, Gladys Epps, the CFO, will be happy to help you answer any questions you might have on sales tax. And I thank you so much for your time today.